After selling its FMCG business to Godrej Consumer Products in an all-cash deal for 2,825 crore rupees in May, the Raymond Group has now planned to focus on real estate sector under the Raymond Limited brand as well. The branded apparel business under Raymond Consumer Care, which will also be soon listed. Here's what Raymond Group CFO Amit Agarwal had to say in an exclusive conversation with Business Today Television's managing editor Siddharth Sarabi.
You briefly touched upon the debt reduction plans. Provide some more color as to how much has been reduced, what is left, and 1,500 crores of cash that you said. Am I to assume that therefore that is post the debt reduction?
Absolutely. So if I look at the debt reduction, once again, during the COVID time, we had a very high debt of almost 2,400 crores, which was a difficult time when the retail stores were shut. Right at that point of time, we were very clear that we will continue to deleverage our balance sheet. And in the journey, from the cash flows of the business and tight working capital management, cost reduction, and good profitability growth in the last 3 years, we could reduce from a 2,400 crore to a 700 crore debt reduction. So that means 1,700 crore, we have taken out the debt from the cash flow from operations. Now, once this 2,800 crore, we have sold the business, after paying tax and such things, we will be left with 2,200 crores of cash. So therefore, this 700 crore will be repaid and we will be sitting on net cash available for the growth of the business of 1,500 crore. So as we speak today, we have already received the money from Godrej. As we speak today, we are already sitting with a positive cash of 1,500 crores. So all the debt of the group has been repaid. There is zero debt, rather sitting on the cash.
Okay, that's an important point. Also tell our viewers about your plans, and these have been disclosed, of raising around 2,200 crore through NCDs. What's the progress on that front?
Sure. So look, this is an NCD. What happened, as I mentioned, that the lifestyle business of Raymond Limited is getting demerged into Raymond Consumer Care. And since Raymond Consumer Care sold its business on a slump sale basis, therefore the cash has come into the Raymond Consumer Care. Now this cash we wanted to use in the Raymond Limited debt, external debt repayment. That is why NCDs are being issued by Raymond Limited to Raymond Consumer Care, and Raymond Consumer Care will give the cash to Raymond Limited to repay the debt. And upon demerger, what will happen is these debts will cancel each other. One will have the debt receivable, another will be a debt payable. So the two will cross each other, eliminate each other, and we will be a net debt-free company. So that NCD is only an internal NCD, the way to get the money so that we can reduce the external borrowings on an immediate basis.
Amit, what is the amount of money that you have sort of put into the entire business? How large is it today? And what is the inventory that you have that is to be sold?
So look, as I said, we have contributed the historical land, so to speak, because as I have maintained all along, and even in that article, that we have been sitting right there during the COVID time, cash flow positive on this project. Even we took a debt on the second project, but even there also the cash flow generation has been far higher. If you are selling the building to the tune of 80%, your ability is always a milestone collection, and our collection milestones are achieving very quickly. So we do not see a challenge of getting the money back from the customers. So when we get the money from the customers, it enables a cash flow positive. So therefore, what our contribution is primarily on the land, and initially we have put some small money. However, now inventory, when we talk about, in the first two projects, as I mentioned, 80% is sold, so only 20% is left. On the third project, as we speak today, I think close to 30% has been sold, and we are looking anything between in the next 2 years to sell another 30-40% of that. So now practically we are already sold out for the various projects. Now we have already signed a joint development agreement in Bandra, which we should be launching over the next few months. Now the whole growth story for the real estate business, because Thane is still an finite land. We have 60 acres to more, but you need to expand. And real estate is not a business only to monetize land. It is a business, core business for us, and that is why we did the demerger. So you will have a real estate pure play and you have a lifestyle pure play. Now in real estate, we are partnering with various people as our board has taken two primary decisions. One, we will not put money behind the land. We will not buy land at all. And we will not move out of MMR because it is much better to stay in this region. You have a better grip. You can monitor closely and manage things better. So now we are getting enough and more JDA projects. One is already signed, and I think few are on an advanced stage of discussion, and that will give us a good opportunity.